Welcome traders to our weekly webinar. Today is, depending on where you are, either Sunday or Monday, Sunday the 26th or Monday the 27th. I'm currently in Australia for the next couple months, so it is Monday morning out over here. If this is your guys' first time tuning in, thank you guys very much. I hold this weekly webinar just about every single Sunday that I can for free for you guys to give you guys my weekly bias, my outlook on a couple different pairs for this trading week. Now, as usual, my disclaimer that I do want you guys to be aware of is that this is just my analysis, all right? I am just one of hundreds of thousands, if not millions of traders out there. So everybody has a different opinion on the way the markets are going to play out each week. So when I go over what my opinion and my bias is of the markets, it's not always going to be right. So that's my disclaimer, is please do not be placing any trades just based off of my bias. This is strictly for educational purposes, for you guys to get some education and some an opportunity for you guys to see how I analyze the charts at the beginning of each week. But please be using your own analysis if you are placing your own trades. A good example is last week I was still biased to a bullish dollar, and we actually saw the beginning of the week just a little bit of consolidation in the dollar before ultimately moving lower. So a good example of how the weekly outlook is not always perfect. However, if you guys do look at my track record on my MyFX book, it says that I have about a 77% win ratio. So there is going to be that 20-25% of the time that we are losing. Statistically, the average trader loses, or the average professional trader that trades full time wins 9 out of 12 months, loses 3 out of 12 months. But because we use proper risk management, even with a combined total of 3 months of losses, the combined total of 9 months of winning way profits over any losses we would experience in the market. So without further ado, let's go ahead and get started. If you guys are, one update also, if you guys are interested in the premium group, I know there's a lot of premium members on here watching this. There's also a lot of free members watching this. On December 1st, this Friday, so actually it's technically going to be Saturday because it's going to be, so Friday, this coming Friday at 11:59 p.m. Eastern. So you have all of Friday. So Saturday morning, 12 a.m. Saturday morning, our lifetime membership is going to be going from $499 to $997 for the lifetime membership. And my monthly membership is going from $69 per month to $97 per month. If you are a member currently, or you are looking at joining the monthly membership before Friday, you will be grandfathered in to that price of $69 a month. And of course, if you're a lifetime member, you pay one-time lifetime fee and you never get charged. I've been running Positive Traders for almost 2 years successfully at this point. So just to give you guys that are new a little bit of background about, I'm not any new company. I'm in this for the long run. Plan on doing trading. At least plan on managing accounts and running my trade copier and running my group for minimum of the next 5 to 10 years. Hopefully, if I get a good setup, a nice thing going, maybe 10, 20, 30 years, something like that down the road. So without further ado, let's go ahead and jump into things. Looking at the economic calendar for the week on Forex Factory, we can see what we're looking for are these high impact expected, these high impact news throughout the week. So that's going to be anything that you see with a red folder. Orange is going to be medium impact, and yellow is going to be low impact. We really aren't too worried about the low or medium as much as we are the high impact. So scrolling through the weekly calendar, the weekly economic calendar for this week, we can see there are a lot of red folders throughout the week. Just every currency, almost every currency has some sort of high impact news this week. We've got a lot of dollar news this week. We've got some OPEC meetings. If you guys trade oil or you trade USD CAD, that's something to be aware of on Wednesday. OPEC is the committee that decides pretty much the production of oil, how much oil is released, the supply and demand aspect of oil. We have some New Zealand dollar news on Tuesday. We have some CAD news on Tuesday. Lots of dollar news throughout the rest of the week. Reserve Bank of New Zealand Governor Spencer speaking. I believe this is also the new governor of New Zealand, if I'm not mistaken. So that could shake things up for the New Zealand dollar. We have some Australian dollar news on Wednesday as well. Thursday, more USD news. Friday, we are loaded with CAD news. We have some month-over-month GDP, unemployment rate, and employment change. And we also have some dollar news and pound news on Friday. So nothing, I'd say maybe our key risk event, maybe this Friday news with all this CAD news coming out, but lots of other news to be on the lookout for this week. Lots of central bank leaders speaking. We just talked about Governor Spencer of the Reserve Bank of New Zealand speaking, Bank of England Governor Carney speaking on Wednesday, OPEC meetings on Wednesday, Bank of Canada Governor Polas speaking on Tuesday, as well as the financial stability report on the New Zealand dollar. Lots of news this week. So nothing, just be aware, guys. The whole gist of me going over the news every single week is sometimes there's going to be certain things we focus on, such as if there's NFP or there's a interest rate decision for a central bank. But for the most part, you guys can see that this week it's just a pretty mixed bag of high impact news. So just be aware of what is coming out. So let's jump into the technical analysis. Let's go ahead and see what we're looking at this week. Looking at the dollar index, and we did a market recap in the premium group on Friday. I just kind of recapped last week for everybody in our group and talked about my outlook on the dollar. And this is just my bias, my outlook, guys. We have been pretty bearish on the dollar. You guys can see I have two orange channels listed or painted out on the chart right now. We can see our downtrend from the beginning of this year, a major downtrend we've been in for quite a while, and that was broken back in late September. And we've been in a small uptrend, small retracement on the dollar ever since. We've been bullish on the dollar the past couple weeks, or actually the past couple months, we could say we've been bullish on the dollar. And this is just my bias, guys. I am still biased to a strengthening dollar. I do believe that although we saw, so if you guys have been following me for quite a while or watching my webinars for quite a while, you guys will know that this 93.2 level, this lower green zone, has been a pretty major level for us on the dollar index. And just to kind of back up a little bit and show you guys exactly what I'm talking about, scale out, this is the weekly chart of the dollar index. And just a quick side note, if you guys are not familiar with the dollar index or you are not using the dollar index and you trade cross pairs that have the dollar in it, such as Euro USD, Pound Dollar, AUD USD, USD CAD, really any pair that has the dollar in it, it's probably pretty important that you learn about the dollar index or at least use the dollar index and look at it. TradingView is what I do all my charting on. I still place trades in MetaTrader 4, of course, but I do all of my charting on TradingView just because they have everything, including the dollar index on here. And the dollar index is a weighted basket, or it's a weighted index it's weighted against, I believe, 6 different pairs. About 56% of that weight comes from the euro. So most of the time you'll actually see that the dollar index does the exact opposite. It's like a mirror image of Euro USD. So if you actually look at this on the weekly, I know there's some chart markings, but if you could just imagine really quickly if there was no markings on this chart whatsoever and it was just a completely blank chart, you can actually look, if you click between the dollar index and Euro USD, they are literally an opposite of each other. So the dollar index measures the strength of the dollar. That's the short and simple way to put it. So if the dollar index is going up, that is good for the dollar or strengthening of the dollar. If the dollar index is going down, that is bad for the dollar or weakness in the dollar. And that is why we see Euro USD do the opposite, because we know if Euro USD goes up, that is going to be good for the euro and bad for the dollar. And if the Euro USD goes down, that is going to be bad for the euro and good for the dollar. So just a little quick side educational note for you guys. But looking at the dollar index, I am still bullish on the dollar, although we have broken between the 93.2 level. My main reasoning for that is because we only had the Friday candle break below 93.2. In my opinion, I think that this could possibly be a fake out. If we don't see, if by Wednesday, by Tuesday or Wednesday, if we don't see the dollar index make a sharp push back above 93.2 and kind of telling us that this was a fake out, if we start to see some consolidation below the 93.2 level and maybe some sideways movement, then it is possible that if we break the support of that consolidation, we will go lower. However, I'm more biased. I think that price may pop back up above this 93.2 level, maybe accumulate some orders up here, find some support, and then move up a little bit higher. So I'm more biased to the upside. However, I do see potential to the downside in the dollar with the sell-off that we've seen in the past couple weeks. So something to be very wary of. Now, we are going to be looking at 3 specific pairs this week, where I'm going to go over all of them very quickly. Some of them are just going to take a couple of seconds, but we're going to be looking at 3 of these pairs over here. I'm going to go over some pretty decent trade setups in my opinion. So looking at the gold, we know that generally speaking, if the dollar goes up, gold goes down, and that if the dollar goes down, gold goes up. They have a very strong negative correlation to each other, so it's no surprise that while we've seen some weakness in the dollar over the past couple of weeks, inching a little bit lower, we've seen gold inch a little bit higher. So last week we actually were up into the mid 1290s. We are near the 1300 level. And I have this orange zone right here painted out for you guys to see. So this is the consolidation we've been in for quite a while. I think almost 6 weeks now, 32 days. So, okay, about 5 weeks we've been moving sideways on gold. I am looking for a break of this channel at some point. Once this breaks, we can expect a sharp move in a direction. Of course, because I am looking for a stronger dollar ultimately, I will ultimately look for this support to be broken. So what I'm looking for on gold, I would like to see it drop at some point. Maybe not today, maybe it'll spike up to 1300 before dropping, but at some point once it does get down to this green level of support and breaks out of this ascending channel that we're in, I'll be looking for some sort of accumulation of orders, some sort of bear flag, some sort of bearish continuation pattern before selling lower. My long-term targets, if you guys have been following me for at least for the past couple of weeks, we've been talking about our long-term targets on gold being around the 1250 zone. So not necessarily even long-term, every trader has different terms of what they consider short-term, medium-term, and long-term. For me, long-term could be around 3 to 4 weeks. Some other people's long-term could be, months or years even. It just depends on what type of trader you are. So gold, ultimately my targets are still around the 1250 level. Euro USD, we saw a pretty big rally in Euro USD. Haven't been interested in trading this, even in the premium group, haven't been interested in touching Euro USD since we've been seeing a rally. I still will ultimately be biased to a lower Euro USD. I think somewhere around this area where we're in now is where we'll probably see price push back down towards the 115, 114 level. Just to point out a couple different levels for you guys, I'm actually going to delete a couple of these levels. I'm going to go ahead and delete this and this, kind of clean up the charts a little bit. I'll pull this back a little bit. That is still relevant. 118.88 is still a very relevant level as well. But just to show you guys what this lower green zone is, and this upper green zone that's above and below price, we can see that the lower green zone around the 114 level. Let me actually get my pointer out so you guys can see what I'm talking about. Around, around 114. Around this area is a major level of previous resistance that we broke earlier this year. And I still think that we're due for a pullback somewhere into the 114 area before going up any higher or breaking the yearly highs at least. If we do break yearly highs, so just to show you guys on the weekly, if we do break the yearly highs around the 120 level that we were in, I think that was September or early September, we were around that level. Then I would definitely expect Euro USD to continue higher than that. That probably means the dollar index will break its yearly lows as well. So if we do break up higher, and this is the weekly, we'll probably get a bounce off of this area and make another leg higher. That's probably equivalent or equal to the length of this first leg. But as long as we stay below this level, I think that we could be looking for another pull lower as well. This could also turn into a three-wave pattern for us. Just a couple different scenarios to be watching. None of these so far I'm super interested in trading yet. We'll get into those pairs that are a little bit lower that we're going to be looking at. USD Swiss franc, not even interested in the whatsoever in trading right now. I'm really guys, I'm not really interested in trading. You guys know that, or you should know. If you don't know, write it down. Euro USD and USD Swiss franc have a very negative correlation to each other. So, we're seeing Euro USD rally right now. So we're seeing a pretty big decline in USD Swiss franc, which makes sense. Both pairs, you heard my outlook on Euro USD. It could go either way right now. They are at significant levels, but ultimately biased to a stronger dollar. So I would like to see USD Swiss franc find some sort of support in this area and then, retrace that move back up. But I'm not really biased. I'm not really interested in trading either of these pairs, Euro USD or USD Swiss franc, until we see the dollar index break back above the 93.2 level. Then I'll resume looking at buying the dollar, selling Euro USD and buying USD Swiss franc. Pound yen, not interested in trading either. You guys know that we have been consolidating for a very, very, very long time. We've been moving sideways on pound dollar, just broke out of this resistance at the end of last week, but it is now meeting this resistance trend line. So if I zoom out the charts a little bit so you can see, there is this red support line right here. All right, so it held price in the past as a major level of support and resistance for price. So I believe, in my opinion, this is still a pretty relative level. Obviously, right here doesn't make a whole lot of sense for this trend line. However, I'm looking at this on the larger scale, on the the larger scale. That's the best way to say it. So we're going to see some resistance in this area. I don't think it's just going to break right through. It could, though, because I do think you guys will see in a second, I'm looking at getting in a buy on pound yen this week. So we're going to be moving to that. So with the pound strength, we could see this pair continue moving up higher, but ultimately just completely on the sidelines right now. The only way I'd be interested in really trading euro pound dollar is if it crossed this alert. I think I put this alert on this pair 2 weeks ago. At the 130.51 level. If you guys don't know how to use alerts, you should definitely look into that. They're very useful. It sends you a text message or an email once price gets to a certain level or crosses, or there's so many variables you can set it up with in TradingView. So pound dollar, still biased, just unbiased with pound dollar. So here we go. We're getting into some juicy setups. This is what I am looking at trading this week. Pound yen, I am looking at getting long on pound yen. I think that we are due for some pound strength and some yen weakness. We have been moving in this really, really nice channel. For some of you guys that may trade on your own or are full-time traders watching this, you guys know that seeing something like this is kind of like a trader's dream, especially seeing this on a daily time frame. We're just waiting for a breakout to the top side. And why the top side is because on the higher time frame, if we scale out, we're obviously in a very, very bullish trend. We have this green zone marks off some major support around the 148 level, which we saw tested a couple times last week. So I'm looking for a break. This is what I'm looking for on pound yen, looking for something like a break and then maybe like a bounce and then moving up higher. But my long-term targets for pound yen are still in the 151, 152, 153 range. So hundreds and hundreds of pips still to be caught on pound yen. Some of you guys that may have been following me, or if you've been in the premium group since last year, you guys will know around this time last year we caught a huge sell. Actually, it was right here on dollar yen. I guess it was a little bit before, a little bit over a year ago. We took this sell on dollar yen last year for I think about 450 pips. I think we had like a 60, 80, 100 pip stop loss, something like that, with a 450 pip take profit, which did get hit. So looking at USD Swiss franc right now, still unbiased on, I'm sorry, USD Jappy, still unbiased on dollar yen. Not interested in trading it whatsoever. Just going to completely skip over this pair for now, guys. AUD USD. AUD USD, some of you guys that are in the premium group on Friday, we talked about looking for this week for some sells on Euro USD. I am very, very, very strongly biased to the downside on AUD USD. We have seen many of our targets reached. For some of you guys that have been following me for a while, or at least a couple weeks now, we were looking at this lower green zone. We were looking at, that was our main target for AUD USD to reach, which it did. We actually, I think, gained about 3% on this pair. And we chose this green level because it was our 161.8% extension level. And why we chose this level, why we chose this extension level was because we previously saw, you guys should all know that the premise of trading, or the reason we take trades, is because we're looking to reduce our probability of a losing trade and heighten our probability of a winning trade. And by doing so, we are basing our analysis off of previous things that we see in the market. So you guys know the saying, history repeats itself. And that is the epitome or the premise of my entire trading strategy, or most people's trading strategy, is the idea that history repeats itself. So you have a pretty good chance, or a good likelihood of something happening in the future if you can justify it happening in the past. And what I mean by that is, if we actually look at our extension level on AUD USD for this previous pullback and where it dropped to, this was, if you guys have been following me for a couple months, a couple months now, even back when price retraced and pulled down and it was down in this level and it was moving lower, we said we're aiming for the 161.8% extension level. And that is right where we saw support on this bear flag for AUD USD. We also saw, I'm not going to get super into it, but you guys know that this middle green level right above this bear flag, so right around this area, is a pretty major level as well. I guess I can just cover it very, very quickly. That green level marks our yearly, not yearly low. Is it yearly low actually? No, not our yearly low, but just our previous swing on our daily. So if we look on the charts and we see when was the last swing, we had a big, big upswing. So we retrace that out, and then on our 50% retracement level, which is right here, we actually saw some resistance. That's why we've been bearish on AUD USD, as well as that green level also happens to mark off. It looks good on the daily, but it looks even better on the weekly. You can see our weekly resistance level from much of 2017, where we saw some resistance and price struggled to break. So expecting AUD USD to move lower this week. Pretty simple with the analysis. I don't think that there's too much in depth that I need to go with. It's going to be pretty simple. I'm going to be targeting the same thing. I'm going to be targeting the next 161.8 extension level. So putting that right there, and then let's mark off the next extension level. And we'll probably do it somewhere over here. And let's move that up a little bit. And boom, we've got our 161.8% retrace extension level. So that is at 0.7468. So this is what, if you guys are doing any of your own trading, this is something you should definitely write down, is that price is right around the 76 level right now, and I'm targeting the 74.68 level. So that's about 132 pips lower than where we are currently. I'm going to definitely be looking for signs and opportunities to sell this pair, but we've got just some real textbook price action, real textbook price action, consolidation, with also a retest of that previous support, now resistance. Now we dropped again. Now we're getting another retest of that previous support, now resistance. So I think once we break this area, maybe drop back down again, come up, drop back down, that type of thing, moving lower. So I think that there is a lot of room moving into the end of this year, into 2018, for downside on AUD USD. My very, very long-term targets are, around the 72, 73, much lower than that. So long-term targets on AUD USD. And it's already actually moving pretty good this week. Check that out look at it on the 1 hour. Oh yeah, just this 1 hour, it dropped pretty nicely. So moving pretty good. Possibly missed a little bit of a short opportunity in this area just now. If you guys trade on the lower time frames, we have a little bit of support in that area. Maybe could have caught a sell stop on a break of that support. Something like this. Maybe I'll look to see if price comes back up to retest. Maybe look at something along the lines of that, something like that. Nice 1 to 2 risk reward, risking about 10 pips to make 20 pips. Nothing super crazy, but a good risk to reward. So if we're risking 2% of our account, we can make 4% on just 20 pips. And that's the beauty of trading, guys. If you're following somebody that's counting pips, I'm not going to get super into it right now, but if you're focusing on the pips, you're going to fail. Just straight up, guys. If you focus on the pips, you're going to fail. You need to focus on percentages. And it's as simple as that. I might talk a little bit about that at the end of this webinar if you guys would like me to. But yeah, if you count pips, you're going to fail. If you set a daily goal for yourself for how many pips you should catch every single day, you're going to fail. If you set even just a monthly pip goal, you're going to fail. Okay. And I don't mean to be harsh. I'm just being honest with you guys. Just going to be straight up. You should be counting percentages, okay? You should be dealing with percentages of your account. And just to sidetrack very quickly, if you guys do not use this position size calculator, if you're wondering, well, okay, you're telling me how to use percentages, how do I know, what percentage? Well, a good rule of thumb is to risk no more than 2% of your account per trade. If you can risk less than that, that's great. If you can risk 1%, 0.5%, that's great. So if you risk 2% on your account, then you just put in your account size. We're on my FX book, guys. You can literally just Google it, Forex position size calculator. And there's so many websites that have it. I just prefer the one on my FX book. And let's just say, I know most of you guys are probably averaging about a couple $1,000 in your account. So I'm going to put $2,000 here, risk ratio 2%. So this risk ratio tells you, it's asking you how much do you want to risk? What percentage of your account do you want to risk? Or you can switch to money. How much money of your $2,000 are you willing to risk? So I like to do percentage. So 2% risk. And then all you need to know is your stop loss. So for example, like that ends, or that trade, not the trade, but that trade idea that I just posted that had a 10 pip stop loss and a 20 pip take profit. Let's say you have a 10 pip stop loss, and we are looking at AUD USD. You just go find AUD USD and boom, you click calculate, and there you go. It tells you right there. It says to use a 0.40 lot size. And it's telling you if you use a 0.40 lot size and you have a stop loss of 10 pips, you're going to lose $40, which is 2% of $2,000. So I was telling you, the premium members, if you're in here, you were probably watching on Friday, but you guys have to use this. If you don't use this every single time you enter a trade, then you're literally guessing. Like there's no way you can do this in your head, guaranteed, just because the exchange rates are always changing. And well, I mean, you can do it in your head. It's not impossible to do it in your head. But what I mean is long term. Obviously, on a trade like this, where all the numbers match up, where it's 10 pips and your account size is exactly $2,000, but how many times? Ask yourself, how many times is your account size exactly $2,000? Right? What if it's $2,067.24, right? How do you know exactly what lot size to use to risk exactly 2% of your account without using this, right? Here you can go and put in $2,067.24. Boom, there you go. Use a 0.41 lot size. Or if you want to use a 0.42 lot size for slightly higher risk, you can. But you have to be using this position size calculator, guys. If you want to be successful, you have to understand risk management, okay? I tell you guys this all the time. Forex is not about flipping your account. You aren't going to get rich in 6 months. You aren't going to get rich in 3 months. You aren't going to get rich in 1 year. I guarantee it. You can. Is it possible? Yes. But is it possible to go walk into a convenience store and buy a lotto ticket and, hit the Powerball and win $500 million? Is that possible? Yes, it's possible. Right? But what are the odds of that happening? Same thing in Forex, right? Is it possible to take $2,000 to $50,000 in 1 month? Yes, but is it realistic? Are the odds in your favor? Absolutely no way. And I'm sick of seeing people on social media advertising flipping accounts and that's the proper way to trade, because that's just not the way to trade, guys. If you don't have a long-term mindset, don't even get into Forex. Don't even waste your money. If you're looking for some get-rich-quick scheme, well, there's not any out there, just so you know. But just like anything, whether you're investing in stocks, whether you are looking to invest into real estate, Forex, whatever you are looking to invest into, if you're trying to get rich quick, not going to happen, guys. You're going to fail. You're going to lose all your money, and you're going to be really sad. And you're going to be out before you're even in. So you have to understand risk management to be successful. So I can go over a quick example at the end of this as well. Wow, we are seeing AUD/USD drop pretty hard right now. So let's look at New Zealand dollar as well. Also, Kevin, by the way, you said glad to see you made it safely to Australia. Thank you very much. By the way, if any of you guys are watching this, whether it's live or the recording, if you guys are in Australia, I'm on the Gold Coast in Australia right now. And I will be here for the next 2 or 3 months or so. So if you guys are in the area, feel free to reach out to me. I'd love to meet up with you guys. I actually like to do some like hands-on training, something kind of nice while I'm out here. But let's continue moving on. Let's look at New Zealand dollar, US dollar. So looking at NZD USD, very similar to AUD USD. You should definitely write down in your trading journals that the Australian dollar versus the US dollar, the pair that we just looked at, and New Zealand dollar versus the US dollar, the pair that we're looking at right now, they have a very strong negative correlation a very strong positive correlation to each other. They tend to move pretty similarly, not exactly the same. Obviously, if you compare the charts, they don't look like how the dollar index and the Euro USD do, how they're like mirrored images of each other. So they don't exactly they're opposite image, inverted images of each other. So AUD USD and NZD USD don't exactly mirror each other, but they do have a very strong positive correlation. So what does that mean? Well, we just spent all this time analyzing AUD USD and why it looks good to sell AUD USD. So we're automatically going to be looking for, as long as price action looks good, we're automatically have a bias on a lower New Zealand dollar, US dollar as well. We've talked about this weekly support, this 50% retracement level, right? This middle green zone. So right about here. That was broken, not last week, but the week before last. We can see this big red weekly candle finally broke that support. We had a little bit of a retest of that zone. And then I think this week we're going to continue falling. My targets on New Zealand dollar, US dollar still remain around the 67 level, which funny enough, look at this extension, guys. This is perfect example of how well extension levels work. So this level right here, about the 67 level, this is not only, let me back up for just a second, guys. Not only is this the 61.8% retracement level from this is actually multi-year low. This is the low of 2015, or I'm sorry, a multi-year fib retracement. So this is the 2015 low to the 2017, this year's high. So 3 years. So our 61.8% retracement level is about the 67 level. But just to show you guys the extension level, how well they work, I believe it is this one right here. Boom. Almost to a T, guys. The 161.8% extension level meets up with the 61.8% retracement level. I also think actually that this extension level right here I may be wrong about this. Nope, look at that, guys. Also, with this small pullback too, look at that extension level, guys. The extension level meets perfectly with the retracement level. Literally, to be successful in Forex, if you can understand basic price action, where we're talking about higher highs, lower lows, higher lows, lower lows, classic support and resistance, basic trend lines on higher time frames, and you can incorporate Fibonacci levels and Fibonacci extensions into that analysis, you can be a multi-millionaire. Am I a multi-millionaire yet? Not yet. I've only been in Forex for 4 years. And I started with a couple $1,000s and built that account. Now my account has grown and compounded to over a six-figure account. But I'm not making, just because I'm trading on a $150,000, $170,000 live account, doesn't mean I'm a $1 million trader yet. But I'm going to let my account continue to compound and continue to compound over the upcoming years. And as my account grows, just as it has the past couple years, it compounds, guys. It grows. You know, if you have a $2,000 account, 10% of if you make 10% in a month, 10% of a $2,000 account is only $200. But that same 10% on a $150,000 account is $15,000. And that just grows and compounds. So that is what I've been doing for the past couple of years, and that's what I'm going to continue doing for rest of my life, or however long I continue trading, until I have a wealth of hundreds of millions of dollars. That's the long-term realistic goal. Because we're being realistic about it. We're looking at realistic returns, using realistic numbers, using realistic scenarios, and practicing what we preach. So anyways, New Zealand dollar lower, looking for it to hit around the 67 level. Finally, to finish the week off, we have USD CAD. Now, USD CAD, I am bullish on USD CAD right now. Don't worry about all the extension levels. Just imagine this chart was completely blank right now, and let's look at this big rally we've seen and this consolidation. This is a bullish continuation pattern, a bull flag. We have some very nice sideways consolidation. So I think we could see USD CAD move a lot higher, and I'm going to be looking for buys on USD CAD. Now, if we drop it down onto the daily, you can see kind of where these green levels play in, and then we can also see our extension level. So I would be looking at buying USD CAD once it breaks back above kind of like this green zone area. So we actually can maybe plot out, like, let's say this resistance right here. All right. And let's look for maybe price to move up higher, then get a bounce off of this, or maybe a bear flag, something along the lines of this, and then moving up higher towards our 61.8% retracement level, right around the 131 area, or 131. You can see over here to the left, it says 131.35. So those are my targets. So my eyes, my focus, guys, right now, I am focused on 3 or 4 pairs. Just to recap: pound yen, looking for a buy on pound yen. But I'm not, guys, when I say I am looking for a buy, it doesn't mean that when we get off this webinar right now, I'm just looking at throwing a buy on pound yen and hoping it goes up. I need confirmation. So I need it to break this channel. I need a daily candle. I need the daily candle to break out of this channel, bounce off of this area, maybe on the 4 hour, and then move up higher. So I am bullish on pound yen, very bearish on AUD USD, looking for it to go lower. We discussed our targets on AUD USD. We discussed our targets on New Zealand dollar, US dollar as well, looking for this pair to go lower too. And looking at USD CAD, it does look pretty nice. Initially going into the webinar today, I wasn't too focused on USD CAD, but after getting to do this analysis with you guys and seeing just especially that bull flag on the weekly, it does give me some good opportunity, or my opinion is to the upside on USD CAD as well. So that is that. If you plan to drop into New Zealand, give you a shout out. Definitely, Gio, getting out to New Zealand. I would love to get out to New Zealand. I don't know exactly when. I do want to travel to Melbourne, Sydney, go around to some places. Definitely get over to New Zealand as well. Just kind of playing it by ear right now. Really focused on the premium group, making people some money. Focused on working on some new updated training videos for everybody in the premium group, trying to get those released this week for everybody. So just tons and tons of value being loaded to our premium members. Obviously, if you guys are a free member, part of my Telegram or Facebook group, I try to drop as much value as I can in there. If you guys do not have our Forex survival guide, very quickly, guys, let me just show you guys. If you're a free member, some of you guys may not know that you guys have free access to a lot of resources. So let me just show you guys very quickly. If you go to our website, and right on our website, you click register, you go down here. You don't necessarily have to get a paid membership. You can start off on the free membership, which most of you guys are a free member. But if you actually sign up on here and you go to, you can click on my account, Well, you have to sign up and everything and then log in. But once you would log in, it would look something like this. Now, you don't have access to a lot of these things if you're a free member. So just to give you an example, if you're a premium member, you obviously know you have access to our daily live webinars. So we have a live webinar every single Monday, Tuesday, Wednesday, and Thursday of every week. We did a weekly recap last week because I was traveling, but you guys can see just tons of daily live sessions in here. They're all uploaded right away for you guys. So tons and tons of value. Literally, I don't know really any other group that does daily webinars. I know some groups that do one here, one a week, two a week, but one that does Monday, Tuesday, Wednesday, and Thursday. I don't really know another group out there. But what you do have access to as a free member, if you come into the back office, two things I want to show you guys. First thing is the Forex Survival Guide. I will be updating this because I did make this about a year, actually well over a year ago, almost 2 years ago now. But this is free for all you guys. It's literally, it has a beginner section. It has a medium. Guys, I created like a step-by-step guide, intermediate. It goes to advanced, like a step-by-step guide of what you can do to begin your education, to begin your adventure in Forex. So we talk about psychology. We talk about all sorts of things. And then it's amazing if you guys go to our helpful links section in here. It is all free. Everything I'm showing you guys right now is free for free members. The only thing you don't have access to is obviously the premium signals, the trade copier, and the daily live webinars if you're not a free member. But everything I'm showing you right now, the Forex Survival Guide, all these links, completely free for you guys. We have a bunch of handy dandy things in here, economic calendar, calculators, but one thing in particular is our Dropbox, okay? We have the Positive Traders Dropbox, and in this Dropbox, we have right here, you can click on ebooks. You can go right in here. We have all these books in here. Now, these books are normally, you have to pay for these normally. Like if you try to buy Naked Forex on Amazon, I think it's like a $60 book or something like that. So you can literally click on it, download the PDF. I have everything right here. These books, I recommend, of course, doing things like baby pips and, going through my Forex Survival Guide and going through some basic education through, things like baby pips is a great resource to learn the basics, to know what you're talking about. But to get onto it, some advanced trainings besides my daily webinars and besides my individual trainings, these books right here deal with price action, specifically Naked Forex and Trade What You See. These are two great books that are based on price action. I think Naked Forex is one of the best books, if not the best Forex book I have ever read. There's one good trade. I'm looking at uploading some other ones, guys. There's one that I'm reading right now. Shout out to Louis, by the way. He let me borrow the book. It's called the New Market Wizards, or I think it's something. It has the words Market Wizards in there. I think it's something along the lines of the New Market Wizards. It's really cool. It's like a bunch of interviews, kind of interview style chapters with different professional and institutional traders, and they tell you about how they trade and what's important to them. And guys, like literally, it's not that hard. If you want to be successful in Forex, you just have to apply yourself. Like that's seriously it. Every single one of you guys watching this right now can be successful. I'm giving you guys the keys, right? It breaks down to risk management, breaks down to risk reward on your trades. Reading the charts, yes, it's not going to be easy. It doesn't come easy, but is anything in life that you do that's worth it easy? No. Anything in life that is going to be worth it is going to be hard, or else if it was easy, everybody would do it. So don't go into Forex. You should go into Forex with the expectation that it's going to be hard as shit to learn. But once you learn it, it's a cakewalk from there. It's like learning a language. I think learning a new language would be hard as shit, right? It's going to be really, really hard. But eventually you practice, you continue doing it for a few years, you learn that language, and then 5 years down the road, you're completely fluent and you don't even have to think about it. Okay? So that is that. I've also mentioned before the four levels of learning something. So if you guys want to, anyways, I'm going to stop jabbering. I feel like I'm going a little sidetracked off of today's live webinar. If you guys would like to be a part of more of these, again, I do a live webinar every Monday, Tuesday, Wednesday, and Thursday for our premium members. I talk about mindset. I talk about education. We mark up the charts, very similar to what we do on Sunday, but you get it every single day. So you get a lot of repetition, as well as everything else. So, that's that, guys. that's all I have for you. I hope you guys have a wonderful rest of your week. Please don't forget about the price change. I don't want anybody that really wants to join, be surprised come December when the prices are like our lifetime membership doubles and our monthly membership goes up. So that's that, guys. I'll catch you guys. Any free members, I'll see you guys in 1 week from now on our next Sunday weekly Outlook webinar. And any free members, I will see you guys in about 24 hours on tomorrow's live webinar. So take it easy, guys. If you have any questions, message me, Facebook, Telegram, Instagram, Slack, doesn't matter. Our Facebook page, you can get a hold of me. However, I will try to find some time to reply to each and every one of you guys. But have a blessed week, guys. Remember, keep that risk management on point and lock. You can be successful as long as you keep good risk management. Take it easy, guys. Have a good one.